All righty, we are on the record. Great. So let's see, I'll do it like this. I'll be fun. Thank you all for joining today. Everybody must be seeking angels in some way, shape, or form. It was fun to look at other events named Find Your Angels because there was all kinds of astrological things. That's right. The nondescript names of events there, always entertaining. We'll see if folks end up joining on Zoom or not. But I'm Melanie Lucas Conwell. I run the 49 State Angel Fund, and we work with Alaska startups and angel investors to get early stage businesses off the ground. Peek at Zoom for a second. Nope, no one's on Zoom at this moment. Who here owns a business or is about to own a business or wanting to? Everyone, Alexa, get on that. Just kidding. I have never been an entrepreneur, but both of my parents have been entrepreneurs, and that's why I'm not an entrepreneur. But I thoroughly enjoy being around entrepreneurs, hence being here today and being a big proponent of startups and founders and entrepreneurs and wanting to see them succeed because I've been basking in it my whole life, and they still are to this day. This event is part of the wonderful Alaska Entrepreneurship Week. 52, soon to be 53 events happening around the state, all around entrepreneurship in Alaska and what that means, how to go about it, resources, connecting people, amazing inspirational speakers at this evening happening right here in Lusac Library, all kinds of great things. Quick disclaimer that the attorneys would want me to say, this presentation does not constitute an offer to sell or a solicitation of an offer to buy any financial instrument or securities described and should not be relied upon as an investment recommendation or advice. The content is not intended to provide legal, accounting, or tax advice. Use of any information contained herein is at the user's own risk, and the user is encouraged to discuss the information contained herein with any legal, accounting, tax, or other professional deemed necessary to understand the risks and uncertainties inherent in investing. So this is all purely informational, to summarize this disclaimer and information. So a few different pieces of what I plan on covering today based on what, well, we put on the event page and what I think folks might be interested in hearing about or might be here for. We can go in different directions as folks want to. This is a small setting, so this is your time. I'm happy to go in any direction. I'm not planning on going too deep into any one of these topics because each one of these items can be its own hour-long conversation. But it's much more to introduce the topic and then kind of see where people's interests lie and go from there. So starting at a high level, there are different ways to fund a business. There are grants that a lot of people think are free money, but there are tax and accounting implications for grants, so they're not entirely free, even though they might seem to be free, and time is money, and spending time putting a grant together can be very time consuming. Loans are much more the traditional or most well-known way to fund a business and fund one's activities. And that typically has monthly repayments and expectations of repayment and interest accrual over a set amount of years. And then equity is where we're going to focus today, and that's around the value of the business and a certain share of that value for that business. And essentially, it is a calculated number that until the company exits or goes bankrupt, that value isn't real, but everything is pretty much estimated up until that point. And so there are very savvy, well-paid people that come up with these numbers so that there is at that either exit or bankruptcy moment, that value can be split up between those that own equity in the business. When we talk about equity, mostly we talk about venture capital or private equity funds. And so I did not come up with this. This is Andreessen Horowitz, famous venture capital firm that has done this research or put this slide together, and essentially represents that over the deals that are done, very few, 6% of deals between 1995 and 2014, only 6% of those deals, venture capital deals, have produced 10 times the returns on whatever value was invested in that company. So all the way to the right of the screen, the share of the total returns, 60% of that capital was from that very tiny, from that 6% all the way at the top. So the odds are pretty low that you're going to go big when you're in the world of venture capital, and that's what investors are betting on, that you're going to go big. And angel investing is kind of the beginning of that journey towards going that 10 times return, 10x plus return. So angel investors, there's no certificate, there's no milestone that you get to and you're like, I'm an angel investor. It is an IRS designation, and the criteria have changed over the years, but generally an individual who makes over $200,000 in annual income or has over $1 million in assets roughly is an angel investor. But best to check the IRS criteria if you think you fall under there. A lot of people might be qualified by the IRS as an angel investor and don't know it. And in Alaska, there is an exemption for Alaska residents who want to invest in an Alaska business, and they don't need to be an accredited investor to invest in these Alaska businesses. Now, there is a certain amount of paperwork that needs to happen for that to happen. If you are planning on offering any kind of investment to Alaska investors, but that's, I can dive into that another time. But generally speaking, these angel investors are wealthy enough that they're willing to be risky with a certain amount of money, and they're interested in seeing that go into start a business for any reason that they see fit. And looking at the growth in the company's growth curve, when thinking about you have your concept, your idea, your cash flow is still not there. You're developing your product, doing your customer discovery. And then as you roll it out, get customers, get revenue, there are different investors that will follow along and be interested in investing with you with different check sizes as well. So typically where angel investors come in is very much at that, okay, you have an idea, you might have started putting pen to paper, you're developing that product, that's the sweet spot for the angel investors. High risk, high reward is their mantra. They want to be in there, get their hands dirty in your business, see how you're going to do things, and help you be successful. So how does it work? Angel investors or investors generally have some form of a thesis that they're going after. Otherwise they'd be investing to anything under the sun, and some do. They don't know where to start, so they're like, I like you. I'll invest in you. That's fine. For the most part, they have an industry preference, a geographic preference, maybe a demographic preference. There are plenty of women-only funds, by women for women funds. There are alumni networks, many different segmentations of people looking for X because they think that that's what's going to go big. So ideally, an investor has some form of an investment thesis. In this case, let's just pick they want to invest in an Alaska business for whatever reason they think. They'll engage with the company and conduct due diligence. And the due diligence is essentially just checking that doing research on the company and understanding what that company's potential is. Are there any legal actions against that individual, that company? What might be risky about it? What are the risks? What are the potentials? Is there product market fit? Who are their customers? Talking to other people. Due diligence can be as more or less rigorous as an investor deems is necessary to make their decision, and write that check and negotiate the deal with the founder. And that's all a conversation that happens between the two entities or the two individuals. And then skipping forward, eventually the investor does count on having some kind of return or not, and then they write it off. And well, as nice as that sounds, it's a little bit more complicated from a tax perspective. There are losses to declare, but the investor does count on something to happen. It doesn't just disappear in the ethers. So there is very much that expectation there. So a couple of things that an angel investor looks for. Angel investing, more so than any other kind of money, is very much relationship and individual based. So whether it's the founder themselves, their founding team, the other advisors, the people they surround themselves on. Come on in. Hi. Hello. Are you here for the angel investor event? Talk? Fantastic. Oh, no, great. Hold the chair and be part of the conversation. You're welcome to sit here. The screen's here as you can see, but hopefully you can find a spot to have a good viewpoint. And let me check. That reminds me to check online. Oh, and we have Linda online. Linda, can you hear us okay?
I can.
Terrific. Thank you. You're our first online person, so glad we got that going. Great. Thank you for joining us in person. So we're just going into what do angel investors look for. That's where we are at this point. So was just mentioning that angel investors really look at the founders and the founding team to see who they are. It's a bit, some people compare it to dating and perhaps even more serious than marriage. These can be long-term relationships that you're in with your angel investors, sometimes over 10 years. So it's very much our personality match, more so than just numbers and papers. There is a lot more to it. And that's where venture capital in particular has had a lot of scrutiny around unconscious biases or very conscious biases. Because they'll look at people that are like them or have gone to certain schools to think that, well, that's the recipe for success. So a lot of groups, and at least I feel like the last 5-10 years, have been really trying to fight those unconscious biases. But when you're investing very early on in a business and that business might change, it is very much that personality match with your angel investor, and they're going to be all up in your business. So you do need to get along with them. They're not going to go away, and they're going to feel very empowered to tell you what's what, since they're going to be part of your business's success, hopefully. Hey, Brian, come on in.
Here's that.
Oh, not a worry. Glad you're here. They do want your business to be incorporated. So angel investment is a form of equity investment, and so there legally does need to be grounds for that angel investor to be a shareholder in the business or an LLC member. Typically, especially for companies that are, most angel investors will look for a company to be a C Corp, not an LLC. And this is because later stage investors do want to have a C corporation, typically in Delaware, because that's the advantage of Delaware. It's how friendly it is to business. It doesn't have to be, but that is generally preferred. And so if you know that venture capital, private equity, going big is going to be your route, starting off as a C Corp will save you legal fees, at least in the long run. LLCs are cheaper to get started with, but that transfer can be yeah, expensive in the long run. Yeah, single member LLCs or yeah, will not be, cannot legally have any investors in it. So don't count on that. And just because I see this often, if you're using online templates, make sure they apply to your business. Do have an attorney look at it ahead of time. It will be cheaper than if you have to have it fixed down the line. I've seen this often, and it's really painful when folks don't use the right template for their business. Moving on, a pitch deck to outline your idea. This is the norm and the standard in angel investing and venture capital. To have that pitch deck, whether it be 5 slides, 10 slides, to convey your idea to whoever it is that's receiving it. You don't always have time to speak with them, so it really has to convey that idea right off the bat. A business plan is ideal and very helpful, as well as financial projections. And these don't need to be perfect. They will change. And we've seen them change oftentimes with our businesses. The Small Business Development Center is a great resource for those. They have templates that I really like and see businesses use and I think are great and applicable to many, and they'll coach you through the process of it. And then as you get through and closer to that negotiation point with an investor, you will want both a capitalization table and a term sheet. So the cap table, as it's referred to, will tell an investor how many people are owners of the company and what share percentages, what kind of investors they are. And we'll go through different investment types in a few seconds. But that will give an investor an idea of where they are going into the business and what their place is in that pecking order of who gets repaid first. So going into, and the deal term sheet is essentially what terms you're offering to the investor. If they're getting 5%, 30%, most people are familiar with Shark Tank. You can see what their negotiations look like. With angel investors, it tends to be a lot more friendly and warm than that, but it depends who you're speaking to. So different kinds of investment types. So 49 State Angel Fund, we invest exclusively in Alaska businesses. And the types of investments that we see the most are convertible debt because they are most familiar, or they seem the most comfortable for folks. But that is just one form of equity investment that can be done. So looking at investors typically like an equity deal or even a dividend deal because that has the potential for more returns than just revenue redemption or royalty return. Come on in. Are you here for angel investing? Fantastic. Welcome. Please take a chair. We're jumping into different types of investments. So the first type on this slide, revenue redemption or royalty revenue redemption, is based on what your revenues are or whatever royalties. So it typically has a sunset or maturity date to it. It's not forever unless that's the way you structure it, although I wouldn't recommend that as a founder. And the investors receive a certain percentage of that revenue. Now, I'm saying revenue, not profit. And so that is a distinction that founders need to be aware of. There are investment funds, angel investor funds that are focused only on revenue redemption, and that's great, and it works really well for high scale, high growth businesses that have really good margins, so that you're able to pay yourself and pay your materials and costs. Convertible debt we see a lot of because it looks the most like a loan, and there's that potential to quote unquote get out of it, where it has a certain interest accrual. It has a maturity date just like a loan, but at that maturity date, if you have not repaid the amount of the loan, principal plus interest, then it converts at a certain agreed upon formula into equity shares of the business. So as a founder, highly recommend from your perspective, looking at, well, making sure that your thinking of it as a loan, if you do intend on not rolling into equity, investors will want you to roll into equity if the business is doing really well. So keep that in mind, and that's where having an attorney on your side, whether it's a friend or someone you pay, I recommend paying them. That is, those clauses are really important, because at that maturity date, your investment agreement is what will dictate what happens. And if it's not said in that investment agreement, like, that's going to be expensive to figure out. So can't emphasize attorneys enough in all of this. Dividends, preferred shares, very much like stock owners or different types of stocks that will pay you that annual dividend. That is an option. I don't see it as often in Alaska businesses, but certainly a structure that exists. And then straight equity in the business. And that one we see more with later stage businesses than earlier stage businesses, because that's where the business is really wanting to grow and grow fast, so that they're getting closer to that exit strategy. And there are a lot of things in between, but these are the common types. And speaking of exits, there are a couple of different ways. So investors are in it for that exit, whatever that exit looks like. And when you're having conversations with angel investors, being clear about what that exit looks like is really important. You're not tied to it. You're not signing your life away on that exit, but you need to have that path, and it's going to change. And it might change, and it might look like a lot of different things, and that's absolutely okay. But having some idea of where you're headed, if you're headed towards going public and being a publicly traded company, is going to look very different than being acquired by another entity. And the partnerships and the conversations you have, the customers you have, will look very different. And so you want those angel investors to help you in that direction. And they probably have their own thoughts and opinions about what your exit will look like, exit strategy will look like. So these are all up for negotiation, and investors do count either liquidation, bankruptcies as an exit path, because that could be, if there are assets left with the company, that is a point where they will get repaid. So why would you even seek angel investors? If any of what I've said up until this point was interesting, here's some additional food for thought. They are given that banks want to see 3 years of past performance and financials before they lend you any money. Angel investors seem to be the attractive option. It is not a fit for a lot of businesses because of that high growth expectation by the angel investors, but it is a quote unquote easier source of capital for early stage entrepreneurs, because they don't need to have those 3 years of financials like loans and lenders might require you. They will tolerate a higher risk than lenders will, and even venture capital firms. So they really are that stepping stone towards bigger checks in the long run, and having a lot, either a lot or quality angel investors that are well connected will get you to those next stages, because venture capitalists will look at who is on your capitalization table, who has already said, hey, we think this is a valuable business, and go off of that, for better and for worse. The equity investment, venture capital world is very relationship and people driven, for better and for worse. Your angel investors will, at least hopefully, become good mentors, provide experience, expertise, and advising to your business throughout. And that's where the dating relationship analogy comes in, because they are very much personally and financially invested in your success. And so they will feel very empowered to tell you what they think about you running your business, hopefully for the best, but in tough times, those might not always be the most rosy conversations, but they are there. They've written a check and are financially invested in your future. So they do have a voice in your business as much as you will let them to. And they will also provide a expansion in terms of your network and provide referrals and connections to potential customers, other investors, as I mentioned, other advisors, and really help your business grow. So they really are a partner in your company's future in different ways. And as I said, yeah, angel investors are a stepping stone towards bigger venture capital checks or eventually private equity funds and exits, et cetera. They will be your biggest advocates. So before we jump into where to find these angel investors, 2 words of advice for the founders in the room. Be clear on why you're seeking angel investors. It is not the answer for a lot of businesses, and that's okay. But if you can't communicate why you're seeking angel investors, why would an angel investor say yes to you? Secondly, make sure you have an online presence. The number of times that someone will call and say, hey, I have this great idea. I'm like, okay, well, what's your business's name? Oh, we're not incorporated yet. Like, well, why should I believe? I don't know you. This was a cold call. I have no proof of who you are. Can't find their name online, or I can in Corkview. Like, not exactly the place I want to find your name. There are a lot of ways to get information. So making sure that you have an online presence, whether it be LinkedIn or a personal website, but that people can build that trust and that confidence in you. If you have a Facebook page, making sure that it's professional and that someone would want to invest in you through that page. And if you have your business, if you've incorporated it, having that online presence so people know what you're doing, what you're after, what you're looking for at a bare minimum. Because we've seen going back into a little bit of legal pitfalls. We've seen businesses that are like, hey, this is going to be our business's name. Like, all right, great. Let's talk through a business plan, financial projections. Oh, we haven't incorporated yet. Oh, our name is already taken. All right. Well, wish you had done that before calling me, because people's time is money and you've just wasted some time. And that's going to tarnish the relationship in the long run if you've wasted an investor's time. So please, now that you've been at this session, please be clear about these 2 points. So where do you actually find these angel investors? Now that we've been sitting here half an hour talking on this topic, your existing network is already a source of this, and particularly family friends, family members. You never know who they know, and asking around for warm introductions is extremely helpful. And the best introductions are the warm introductions rather than a cold call. Thankfully, 49 City Angel Fund is a government fund, so I'm used to cold calls, and I'm just as friendly with a cold call as with a warm introduction. But that's because I'm paid to be that way rather than anybody out there. Warm introductions are, of course, the best way to get to know anyone. There are many pitch competitions that happen in town. There are business accelerators. G-Beta is one of them in town that has their cohort running right now. They have 2 cohorts a year, and they're a great 7-week free accelerator program for Alaska businesses that run in the spring and the fall, and will go into everything I've said into much more depth and go into all of the business documents. Annually, there's a group of investors that get together to host the Alaska Angel Conference, typically in the spring. Things are still being decided for 2025, so I'll have the website up for the Angel Conference after this slide. But that is a great way. About 20 companies start off in the Angel Conference. There are about 10 to 20 angel investors, all Alaska investors, Alaska startups, that get together and eventually lead in one check out of those companies. But the process is very much, there's both the educational, the networking aspect, as well as one business gets a check at the end of it. And some of the businesses get checks as sidecar deals as a result of the connections that have been made. There is a Alaska Investor Network that meets monthly and typically on the third Wednesday of the month. It is happening on the 23rd of this month, but otherwise typically the third Wednesday of the month. Informal group, typically they'll have one or two startups pitch and other topics that matter to angel investors. And it's this year they're restricting it to accredited investors only to hopefully increase the odds of checks being written into companies rather than opening it up too broadly. There are crowdfunding platforms out there. WeFunder and Republic tend to be, and there's another one, Seed. Seed Invest is both there are many platforms out there. WeFunder and Republic are two of them that are out there, and that's very much, it's similar to there's some for donation based, GoFundMe, but for equity investments. So anybody accredited and unaccredited investors can all become investors in businesses that post on there. So trying to get angel investors across different spectrums, different check sizes, and that makes it a lot easier for businesses to aggregate pools of money through these platforms. AngelList, Gus, Seed Invest, or other platforms that you can put your pitch deck, your business plan to, and apply, and then get selected to go in front of a certain group of people that might then write a check. And there are a lot more of these resources. You can keep going broader and broader. I'd say for Alaska companies, we see a lot more angel investors, families and friends, of course, are the most common starting point. That then, going through programs like GBeta or Spruce Roots program in Southeast, wherever there is a technical assistance aspect that helps shows to investors that you've done more work than just you in a room and your computer. That helps validate whatever you're working on and shows that you've had some feedback to help grow your business. So always helpful there. One helpful tip in terms of finding angel investors, think about where, just like you're thinking about your target customers, thinking about where your target investor might be. And back to my earlier point, why you're trying to find angel investors. If you're looking for investors for a real estate business, you would go to real estate related events. If you have a software business in the education space, you would go to events that are related to education and software development. So really being thoughtful about where might these mystical angel investors go to and what do they look like, similar to how you would look at your target customers. The Alaska Angel Conference, as I mentioned, is centered around matching Alaska companies with Alaska angel investors. TBD on the dates for 2025, but the company that was selected for 2024's angel investment was Montes Corporation based in Wasilla. That does aviation, weather sensing, monitors, much better than the existing pieces. And I'm failing on giving their pitch longer than that, but generally that's their scoop. And that's what I've got. Questions from folks?
Do you happen to have any of those resources that you have up there?
Yes, I will share the slides after this to those that registered, since that's the only, unless you give me your email address and you didn't register, I don't know your contact. So give me your contact and I'll gladly share the slide. Was this content helpful? Did that clarify a bit about these mystical angels? Okay.
One question.
Yeah.
When they invest in the company, and I want to think that somebody that invests 5,000 doesn't have the same voice as somebody that invests 50,000 in the company. But at that early stage, how the weight of each investor gets determined, so that in the future they know how to weight that decision? as well as how the growth of the company is considered later when it actually, because everybody's expecting the company to grow. So how to determine, yeah, we are gonna grow $10 billion and you invested 5,000, that's gonna grow like this. And somebody says, no, I actually think it's going to grow just $1 million. So those are two questions in one.
Yes.
Okay, okay, I'm sorry.
To the first point of how do you weigh a angel investor's advice and how much time they get, that's up to you as the founder.
Okay,
Angel investors will have their own opinions about these things. And you might find that a $5,000 check investor might have more value to you. That person might have more value to you than the person writing a $100,000 check.
okay, so it's not
That does
them,
happen.
it's not them saying, hey, I just put 100,000, my decision should be.
Oh, they might say that.
But the
Most
founder is the
definitely.
one that decides that?
Oh, no, it's you. Well, and this isn't a contractual thing.
Okay,
This is very much an agreement. People will have, there's a reason why someone is able to write a $100,000 check.
mhm,
So I would expect that they've done fairly well for themselves in their life, and they might not be shy to voice their opinions.
okay,
But you as the founder will get to
Yeah.
decide how much you listen to them and in what fashion.
and in that case, if it's accepted or not, it's a whole different story, but as a
Mhm.
founder, you can say, well, this person gave me 5,000, you gave me 100,000, but all three are gonna have the same weight for making a decision. And if they take it, they take it, but it's a personal decision, the founder gets to decide. Okay,
And it depends on the investment agreement. And so if you have shares in the business, it might be that formal decisions are voted on by units of ownership. And so then then the amount of money does matter for formal decisions. And you can have different share classes as well. You can have Class A that are voting, you can have Class B that are non-voting, and you can have all kinds of wacky structures as you wish. And especially earlier on, as a founder, you don't want to give up too much equity because in the long run, bigger investors will want more equity than the smaller guys. So there is a certain game to play there as to how much equity you give up. But yeah, you get to decide. Now, it might end up being a negotiation and a conversation. That's certainly there.
and that applies, how does the incorporation of the company play into that when you have shares to, okay. that-
Play with. Yep, that's one part. If you are an LLC, then it's percentage wise.
I have two questions. One is really dumb. I'm gonna ask it first, just for fun. Okay, so an angel investor has to qualify to be an accredited angel investor, but what if this person has no income and they won the lottery, they're an idiot? Are they accredited as an angel investor because they have money in an account because they won the lottery, even if they only pull $40,000 from that each year?
I would
their
think,
lives?
yeah, if
Okay,
they have over $1 million in assets.
so
Yeah,
it's just about assets and there isn't any
Over
like
2 to 3 years.
technicality about income.
It's assets.
Okay, okay.
Mhm. It's
Perfect.
or, and yeah, the IRS, that accredited investor page is like so long. Yeah, there's no, and for those that weren't here when we talked about accredited versus unaccredited investors, it is income and asset-based or asset-based, but there's no, you file your taxes and the IRS is like, oh, congratulations, you're an angel investor, or you're an accredited investor. So it is
It's
fuzzy
just that
in that
money
sense.
exists. is the
Right,
goal. Okay,
exactly,
cool.
yep,
That
and
clarifies.
it's self-certification.
Got it, okay, that makes so much
Yeah.
more sense. Okay, and then the second question might be useful, and do you know of any resources you would recommend for learning how to structure investment agreements before heading into the process of entertaining the idea of angel investment.
Yes, happy to follow up on that.
Okay, cool.
There are a lot of resources on it.
Yeah,
Yeah,
sure.
happy to.
Okay, I'll send an email then. or-
Perfect.
okay,
Yep,
okay, cool.
I have a stack of cards, right here for that purpose. And it is the cop out is find an attorney that will help you out.
Right.
But based on the different types that we were talking about, it's gonna, minutes ago. There's kind of those big buckets of investment types. And you might go to an angel investor or someone and say, this is what I'm thinking of. I'd like to have a convertible note. And they might be like, nope, I think that your business is going to go 10x in 3 years.
Mhm.
I want equity stakes in the business. It's all a fun conversation. But making sure, step one, making sure that the business is set up in such a way that you can offer that is important. And yeah, and then going off of that.
Okay, cool.
Yeah. Gosh, I'm way, Venture Deals by Bradfeld. That created Techstars is one of kind of the staple book on venture capital for both angel investors and for founders, as to the different structures and implications of venture capital.
Okay, cool.
Yeah, and there's a lot out there.
Yeah.
Yeah. And your first question was not done, for the record.
Very
Very valid.
Super technical
Uh-huh.
sometimes, so I have to.
Yep. So is the IRS. Yes.
So since a lot of these topics ended up with, don't forget to get a lawyer, are there suggestions like, how do you, like upfront, do you pay them upfront or do they work on, how does that work? Like, obviously some people can't just pull it out of their, to do that.
Yeah. I've heard it, so I've never been on the founder side and actually engaged an attorney myself. So others might be more qualified to answer this. I see Linda James on the line and she's had a few startups herself. But certain, depending on if you're going with like a big name attorney or if you're going more with independent attorney, they'll have different pricing structures and they're not cheap. It helps to reduce costs. You might find those templates online that you think apply and go to them and say, hey, this seems like what I want. Does that sound right for what I'm trying to do?
But when they charge you for that too.
Well, the templates, yeah, to have the conversation, I'll say, well, a lot of attorneys will take a 15-minute call and not charge you because it's just a discovery call to see if it's worth both their time and yours. Some attorneys, I don't see this very frequently, but they'll ask for an equity stake in the business and that's their form of payment. That can happen for any services if they really believe in the business. Others will be, well, 50 upfront, 50 later after you've raised funds. They're different ways, but attorneys aren't cheap for a reason. And yeah, they do intend on getting their money some way, somehow. But I've seen some, particularly the independent attorneys, be more creative about how they get payment.
It's also important to find attorneys that are familiar with your type of business.
Yeah.
So say you find a real estate attorney to do a startup deal, it might not be, because they themselves are not familiar, or they have to go do hours of research in order to do it for you, and it may not be as efficient.
And I'll say for as much as the big brand law firms cost, and it is a pretty penny, over $500 an hour, they have their own templates that they will rinse and repeat. And so even though it is a high hourly rate, they might not spend very much time on your deal.
Well, there's an attorney and there's a paralegal.
Right.
So they,
Yeah.
you know,
Mhm.
an ethical attorney would say, well, unless we are in trouble, talk to the person who charged
Yeah.
you half, a third of what I charge.
Yep.
And you can be a CD like me and say, no, it's up to you. That's up to you.
Absolutely. Yeah.
Initial budget, 5,000 to 7,000. Of course, year to 2 years, figuring startup stuff. If you budget with that, then
you'll be close to getting off the ground. And pick an attorney, like if you're looking for attorneys to do specific stuff, it's a specific deal. Like you have a high growth startup, or if you don't have a high growth startup, don't talk to those attorneys, right? Look for local attorneys that, okay, this is standard business startup, you need this paperwork, that sort of stand-up is not super expensive. But putting the deal together, putting the equity share cap, market cap, if you're not a high growth business, if you don't intend to be a high growth business, then there's no reason to look for attorneys to put that deal, that kind of deal together. So,
And
mom and
then-
pop shops can still make a lot of money, right? On steady income, steady curve.
And Linda adds on to that, saying price rounds are more expensive than safes or convertible notes, to add on to what Brian was saying. So a lot of early stage founders choose non-price round instruments to start off with. So yeah, the revenue redemption, simple agreement for future equity, safe and convertible notes, because there is no value of the company tied to it. Thank you, Linda, for adding that. And I also wanted to add, there is one attorney in town, Andrew Mitten, Vellum LLC, who does a subscription model for his services. I don't remember what his fees are, but that's his hope of like de-risking, talking with an attorney, and he has a lot of templates for setting up businesses that he uses, and then you have access to him. I don't know if it's a certain number of hours a month, but subscription models for attorneys.
Yeah, I talked to
Another
him
way.
this week, and right now it's 120 flat fee a month. But when it comes to specific in the beginning one-time service, that I don't know. I have worked with companies in consulting mode, companies that use them, and that's not a recommendation, but he's always been delivering what we needed at that moment. And if there was a fee, the fee that I saw was not outrageous. But again, it depends on a specific case. But what you said is a really good. I will give him a call. He's been around for 10 years for sure, working with small businesses, so he knows. I'm tight in budget. Like he's not gonna tell you, but like I know. So because he's used to that. So he's familiar with what small businesses is, but he also knows enough that he knows how to get to the next one. Quick question. Without getting into too much technicality, difference between angel investor, venture capital. In simple terms.
Yep, angel investor, one individual person. Venture capital tends to be a firm, entity, bigger stakes, bigger chunks.
Okay, can a venture capital have the role of an angel investor, meaning start investing in early stages and be more flexible? Okay.
It could.
So if somebody's labeling themselves as a venture capital, that does mean that, well, ask them, because maybe they play the role of, okay, can an angel investor be a venture capital?
You can have angel investors who work for a venture capital firm.
Okay.
And one, depending on, is it Series 6, Series 7, depending on what their professional certifications are, they might not meet the accredited investor income or asset requirements, but because they work for an institutional firm and they have the right certificates, they are considered angel investors.
Okay, so for the sake of understanding how things work in town, you will be the first one of the first ones that people can contact before they contact the venture capital. You will jump into that first stage of the business, and then when things start to grow, you will be able to pass them or put them in contact or prepare them to reach venture capitals.
Yeah, and when you say you mean angel investors.
Yes,
me
I mean, no,
specifically.
no you as an individual, but 49 is a yes, yes.
Yes, and to clarify what Pascal is asking about, so 49 State Angel Fund, we are a government venture capital fund housed within the municipality of Anchorage. I haven't spoken too much about 49 SAF because we're towards the end of our fund, so we're not as active as we have been in the past, but we match angel investors or equity investments in Alaska businesses. And so if you've gone through this whole process and have a check of $100,000, then we will come in and match on those terms, equity terms, those angel investors. We have a few deals on our pipeline that might end the fund. So I'm not sourcing as many companies at this moment in time. But yes, that we will do early stage investments. Yes, in fact,
And when you say match, I didn't catch your 49.
49 State Angel Fund.
Okay, so does that mean, grant? You're matching as a grant or it's a loan?
It's an investment. It's an angel
Okay.
or venture investment. Yep, and we can only match private equity investments made by third parties, not a founder themselves.
Okay.
Thank you. Linda, do you want to add something? I see your hand up.
Yeah, I was just gonna say, add to Pasquale's question. Can you guys hear me okay, first of all?
Yes.
Okay, awesome. I think the biggest thing between angel investors and venture capital is that venture capital is always going to be investing other people's money. And as such, they have told so they go out, venture capitalist goes out and raises a fund. And they've told the people that have invested into their funds, known as limited partners, that they're going to invest, and this is going to be a criteria upon which they will invest, also known as a thesis, right? So once that thesis is established, they can't go chase shiny objects. They have to invest within the thesis, and sometimes it's geographical. Sometimes it's in a vertical, like you could be an ed tech, education technology, VC firm specifically, right? And so, and you can be anywhere in the super early stages, idea stage, or you can be in the series C and D and whatever else, right? So the biggest thing is, when you're going to a venture capitalist, you have to look at their thesis and you have to understand that, do they invest in a company like mine, as far as stage, as far as the kind of company that I am, where am I located, the types of checks they're writing. So you really have to do your research and go to them only once you realize that, yes, this is the right investor for me, because that's going to be one of the first questions they're going to ask you. If that makes sense. Yeah. And with angels, they don't have those parameters. It's their own money. They can kind of do whatever they want to do. It's their money.
Yep. Oh, thank you, Linda. Great addition. And for those thinking about venture capital funds, there's a free tool called crunchbase.com. That's a great way to look at what venture capitalists have invested in. But if you also are curious about a business that might be similar to yours, you can see who has invested in them as well. So do a little bit of market research on what kind of investments are happening out there. There's a paid tool called PitchBook, which is very expensive to have licenses for, but is also a great tool that a lot of venture capitalists use to find new deals, to see what other funds are investing in, where the trends are, and what they might want to raise funds for. So. What else is simmering? Pascal.
Well, I was going to ask, can you highlight what you think are biggest struggles that company have when they approach you that it will make your job easier, so you don't have to do that? Hey, I just talked to you for 2 hours and do you need this? And also so that people know what they need to put together before they approach you. If there's something or an anecdote or or something that you comes up from the top of your head, like, yeah, that's you, that I usually see it. I know you trade of it, but we
Yeah,
have some new folks here.
no, absolutely. Yeah, well, I don't know if it's my biggest pet peeves per se, but what makes my life the easiest is if your incorporation documents are done properly. You're properly incorporated. In the last few months, I saw a business who was incorporated, who was a C corporation, using LLC documents as their governing documents. That doesn't work. It just does not work. The terminology was entirely wrong. They were issuing, it was just bad. Like, don't do that. Back to my point about don't use the wrong templates and do talk to an attorney. Hey. Also, having the business plan, as annoying as of an ask as it is really a document for someone who's never met you and doesn't know anything about your industry or your business and what your ideas are. First of all, it shows that you've put time and respect my time by putting something pen to paper, that you've thought and been thoughtful about what you are presenting and going to market with. And that you're not wasting my time with wacky ideas, which I love hearing, but if on a busy day, like, well, I have other things to do. But that you've actually spent time to think about who your target customer is and how you're going to close those target customers and what your financial needs are, because that makes it much easier for me to say, okay, great, I can see the picture. How can I jump in? I understand, like, great, I have connections with these kinds of customers. I know who you need to talk to. I can bring that value. Our kind of money is perfect and will help you grow and achieve these goals. Fantastic. It might be a little bit lofty, but that's okay. As an entrepreneur, you should have big ideas. And I want you to have big ideas. Those are the main pieces. And yeah, if you have no online presence whatsoever, or if your only presence online is Courtview, not ideal. Work on that. But whenever someone gives me a phone call, I immediately look up the name of the person that's calling me and the business that they mention. So do your own homework before you go to someone. Because if you expect them to put time into you, put time into yourself and show that you respect their time.
Thank you. For those of you that may or may not know, for documents, attorneys, but for business plans, we have three resources in town. SBDC has business plans with some examples for different industries. Also, SBA has business plan templates. One easy, one a little bit more in depth, and they also have those in Spanish, and they are free. And that gives, they are not too long, but cover all the basics. So we make Melanie's life easier.
And to one point, I think it was SBDC this morning during 1 Million Cups that mentioned AI is a great tool, but people know when you've used it for your business plan, they all look the same. So use AI, but verify it.
And we're leaving with company name in brackets. My company name.
I don't see that in investment agreements. I mean, enter state that you're located in.
He's in it. Are you?
Oh, yeah.
I'll leave it.
Oh, yeah. No, that's a real example. Like,
Along those lines, like how is it viewed if you just use one of those templates, even if you fill it in all correctly, like
fine,
or
totally fine.
is there any disadvantage to veering away from using a template like that or
Nope,
like
it's great.
adding to it?
I love the SBDC, SBA templates are fantastic because I know what to expect.
Right.
I'm like,
So
oh,
that's
okay, the
great.
financial section will come later and the marketing
Yeah.
section will, I know that you've covered the bases because I know the lay of the land. So if anything, it saves me time because I know where I'm navigating. Yeah.
And some of those templates are actually above what you can find on internet. The one on SBC, they have the deeper financials. And even if you want to add more, like you have a specific depreciation for certain assets, you know how to navigate that and you can expand it without breaking the whole.
Right, yeah.
So even if it's a template, it's good.
Okay.
It's enough for.
Well, we are over
Yeah.
5:30 and we have a fantastic speaker this
Yeah.
evening in the Lusac
Thank you.
Library. Doors open at 6?
Yes,
What's the
yes,
time?
there's
Yeah.
people in the parking lot, I have to, yeah.
Also, we have some.
Thank you, Linda, for joining online. Thank you for adding in. We're gonna call it here.
See you guys. Thank you.
Bye.
Thanks.
We have some vouchers for food, coffee.